Good morning, everyone. Ken Angst, Hope Prop Zinvi, the Angst Real Estate Team. Hey, thanks for coming back to our podcast this week. I hope everyone out there and their families are doing well. Hey, we're self-isolating this week from the home office, so we're at home. And what this podcast is about is the follow-up interview with Chris Bird. Last week we did the first episode, which was about how to take deductions for depreciation and how to depreciate your property if you own a rental property. This week we're in the second episode and we're going to follow his interview. He talks specifically about the qualified business income deduction and how it applies to rentals. Also, we're going to talk about how to properly deduct personal property within a rental property. There's some new rules out. Chris covers them. As always, if you have any questions or comments, please leave them below and I'll try and get them answered in the best manner I can. And I hope everyone's doing well, and we'll look forward to talking to you next week. Thanks, and enjoy the interview with Chris.
Let me go into a big item in taxes, and this has happened in the last 2 years, starting January 1st of 18. We have a new deduction that's called the 20% qualified business income deduction, which is Internal Revenue Code section 199A, as in alpha, capital A. And this is not only for people with pass-through income, like from S corporations, sole proprietorships, things like that. It's also for owners of rental real estate, whether they own it in their own name or LLCs. And the deal is, a lot of accountants don't think their clients qualify for the 20% on their rentals. And there's a revenue ruling the IRS issued in September of 2019. And for you all to look it up, it's Revenue Ruling 2019-38. And what that does, it lays out a safe harbor, an IRS safe harbor, that if you follow the rules of the safe harbor, you can claim the 20% deduction on your Schedule E rental property profits. So I would recommend you all take a look at that. Now, another thing that you need to be aware of is the Tax Cut and Jobs Act of 2017 that went into effect primarily on 1/1 of 18. Provides a lot of new accelerated depreciation deductions for things that go into rental property, like carpeting, drapes, appliances, things like that. Historically, we've always had to depreciate those things over 5 years, and now we have the opportunity to write them off in the year that we buy them and place them in service. Again, talk to your accountant about that for this reason. You got to constitute a trade, or again, let me repeat that. Only one rental property, like a single-family rental, probably will not qualify. So you have to meet the trade or business requirement, and this safe harbor helps you do that. So that's something else. So, Ken, those are the big issues in rental real estate, and that's not all of them, but we've covered some of the better ones.
Yeah, we spent 8 hours today kind of going over for all realtors, but what caught my attention, Chris, was the detail that you laid out for real estate investors like myself and all the tax changes. And I think the biggest thing that we learned from today is you better have a top-notch CPA or enrolled agent in your corner.
Correct.
Knowing what's going on specifically in realty. So I appreciate it coming in.
Thanks,
and
buddy.
have a safe trip back to Chicago, and we'll look forward to seeing you next year.
Remember, Shawa.
Shawa.